So I've been talking a lot about Ethereum as it is one of the two major cryptocurrencies along with Bitcoin. And despite the doom and gloom that we've experienced over the past 2 weeks across the crypto sector, Ethereum is one of those beacons of hope, one of the rays of light that we continue to see. And it's kind of helped me stay confident throughout this pullback, but it too is getting a little precariously close to some of its supports. So I'm going to get rid of all of my markings and everything. You can see that I've been doing quite a bit of analysis on a regular basis on Ethereum. And when we look at this, this is our short-term 2-hour view. We have a 1, 2. So it's a larger degree 1 and a 2, and then a smaller degree 1 and 2. And as I've mentioned across the various cryptos, we had a non-standard subwave 1, which went higher than you'd expect, because typically you wouldn't expect the subwave 1 to go any higher than the 0.618 extension of the larger degree wave 1, but we almost made to the 1.0 extension. So I've been taking that as a bullish sign. It may be a sign of things to come, higher extensions. So what's happened over the past 2 weeks is that we topped in the 4,800 range, actually 4,860 to be exact, and we pulled down in a very corrective looking manner. You can kind of see the pattern here. It's a clear three-wave pattern. You have an A wave, a B wave, and a spike C wave down. It looks very, very textbook C wave in that it looks impulsive. There aren't too many wiggles, nothing like that in there. And we hit at the very bottom of support. I had a support right at about 3307, 3315, somewhere in that range, depending on whether you're looking at the linear or the log chart. But we hit that and we bounced off like a trampoline. And this spike was literally, I think it only lasts about 15 minutes, maybe 5 minutes. I'm going to zoom in a little bit just to show what we're dealing with here. So we bounced off. We had what looked like a 5-wave rally up, and we've pulled back since. So I'm going to shift to our 15-minute view and put some of my markings back on the drawing. And this is a closer view. I think we bounced off of 33.15, something like that. We had what I was calling a 5-wave rally. This is proportionately correct. You can see how you have a 3-4. 0.61 extension was the top of what I was calling the 5th wave. So everything looked very clean and healthy then. And this pullback looked like a pretty healthy correction. I wouldn't have been too surprised with more of a pullback, and that's what we have gotten. This pullback has gotten a bit long. It's dragged on quite a bit. I wouldn't want the second wave to go too long. Your standard retrace level would be the 61.8% retrace, which would have been at this red line here, which is sitting at about 37.65. We spiked a little below that. We didn't quite make it to the 76.4% retrace. So that's a good sign. I would prefer that we not break that. Assuming that this is our A wave here and we had a B wave bounce. If our A wave is equal to our C wave, that would put our expectation about 35.19. So I have an alert set there for myself. If we break that, I'm going to be bracing for cover, because that would be a little bit too close for comfort for me. So in summary, we're a bit deep on the second wave pullback of the smaller degree. Now, when we look back at our big picture view, I'm going to take the markings off again because there's a lot of clutter on this chart. We had this peak in May of 2021. This was the third wave of our final blow-off rally, and the subsequent pullback was a fourth wave. That's what I was calling this. And you can see that 1-2-1-2 nested setup. It looks a lot better on the logarithmic chart. I don't know if that helps clarify things as that much, because there's so much going on here. But the subwave 1 landed somewhere between the 0.618 and the 0.764 extension of our larger wave 1. So it's a little bit more acceptable in logarithmic terms. You can see the spike down rally that happened. Not a spike down rally, a spike down correction. And this was, of course, I believe on, was it December 4th? That's when that happened. So right now we're holding on. As far as we can tell, our targets overhead haven't changed. And I've been reiterating this across all my crypto review videos for Bitcoin and Ethereum. We haven't shifted our targets at all, because right now we are still well within the bounds of a standard 1-2-1-2 setup. So this is, again, these are the two cryptos where things are still looking golden. Along with this, of course, you got, was it Polkadot, Polygon, and Solana? Those things are relentless. They look incredibly bullish. Some of them have rallied to all-time highs, I think, since the crash happened. So those are looking fine. I'm not worried about those. If we do hold together in Ethereum, I've got our subwave 3 target somewhere between 86.27 and 10,545, which is in this purple box here. And assuming we are following an impulsive pattern, I wouldn't expect too deep of a fourth wave. And our final top, based on standard extensions, would fall somewhere between 11,900 and about 14,593, somewhere there within that range. Now, there are, of course, strong Fibonacci extensions overhead, and extending beyond those targets would not be shocking at all. I do have that 18,970 target looming overhead. That's still as strong of a target as ever, and I would not be surprised if we overperform. If we outperformed in the subwave 3, that would be a very good sign of things to come. Now, the alternate scenario, again, I have a lot of clutter here, is the red pattern, and that would insinuate that this pullback here was the A wave. We've had a huge B wave, what we call an expanded B wave flat, in which the B wave topped well above where our third wave went, and then we'd have a C wave coming to destroy all positive sentiment for quite a while. I'd like to note that this is a bit more likely than I'd be comfortable with. If you recall our previous Fibonacci patterns, typically your third wave will land between the 1.382 and the 1.618 extension of your original 1.2, which I have set back here. We didn't quite make it to the 1.618. Sometimes when you don't get to a significant Fibonacci level, your corrective bounce will actually hit that target. And when we look closely, our target's about 48.53. If you recall, I think it was like 48.80, something like that was our all-time high, if I'm not mistaken. We hit that with the B wave. So that makes it a little eerie that this could actually be a corrective B wave. It just tried to, exhaust all the buying sentiment, all the bullish sentiment. And now that would indicate that we may be in for a nasty C wave down. And if that happened, our support would be at 1194. Actually, excuse me, it would be a little lower than that. This thing should be at the 0.764 support level. Let me fix that real quick just to get a more clear support here. All right, so the 0.764 support would be 1151. That is where the expected C wave would fall if we did break support. So again, our support is currently at, what did I put it here? 2653. 2653 would be the base of our bigger wave 2. So let me zoom this out a little bit so you can take a better look at this. The 2653 falls right around here, somewhere here. Yeah, bottom of our, what I was calling the major wave 2, or the larger degree wave 2. If we break that, that's a really bad sign that we may have some bearishness coming our way. So I'm going to keep an eye on this. What would I do if this happened? If I saw that happen, I would seriously start to consider reducing my position sizes. Throughout this entire crypto rally, I haven't sold a single thing. I've done some reallocations from less promising cryptos to others and rebalance for diversification purposes. So I haven't sold anything yet, but if that happened here, and if Bitcoin had a similar sign, I'd be very, very vigilant. I'd be watching this very carefully. I would start strongly considering getting out of some positions. So that's what's going on here. Right now, nothing particularly dangerous looking at the moment, but if you want to keep up to see what the status is, get an early warning if we see any kind of negative development happening, anything bearish, don't forget to subscribe. And if you enjoyed my video, please like. Till next time, thank you for watching and happy trading.